into this change on the markets for British businesses and for us as consumers. Well, Mark Shapland, correspondent of the Daily Mail Online's This Is Money. Mark, welcome. Thanks for being with us. Let's start with the pound. Why is it falling?
Well, it's falling simply because foreign investors don't quite trust exactly what's going on here. After our EU referendum vote, the comments that Theresa May has made at the Conservative Party conference, there are a number of doubts about where we were going and where the British economy is heading.
So the fact that it hasn't recovered from the lows it's been experiencing over the last couple of months since the Brexit referendum suggests to you that the government message hasn't been sufficiently reassuring to people overseas?
Well, I wouldn't say that. I think the government message has been clear. I think maybe some traders have been slightly in denial. Maybe they have thought that actually politicians won't see this through and that somehow it's a big smokescreen. But what Theresa May has said has made it very clear, and now they know that this is going to happen and we have a timeline, and the markets have acted, and they have acted the way they have.
Nothing is ever wholly good or wholly bad when it comes to these figures, is it? So I guess from the point of view of those who are exporting to a lot of countries, the weakness of the pound has got to be helpful.
Yes, it's good if you're an exporter. It's fundamentally a good thing. Having said that, it does it makes import prices go up. So we could have inflation, which could be a major problem.
Right, and that's always a risk. What about the performance of the FTSE 100, this kind of buoyancy that we're seeing in share prices? Is there much to be read in that, or is that, in your view, just part of the ebb and flow?
Yeah, I think it's important not to get too carried away with that. I think one of the major problems we have at the moment is interest rates are very, very low. And so that means where money goes is limited. For instance, when interest rates are low, you're probably not going to invest in bonds and such assets like that. So people are looking at shares and stocks and thinking, well, actually, they're probably pretty good value, and we'll put our money there.
So it's gone in a sense kind of through the roof, but doesn't necessarily mean it's going to stay there, because presumably it's a lot easier to move your money out of shares than necessarily out of stocks, for example.
Well, that's true, but it could stay there. I mean, these are good companies. These are big companies, BP, some of the banks, provided we keep our passporting rights and things like that from the EU. If the results are good and they pay dividends and they pay consistent dividends, then there's no reason why the money shouldn't stay there.
What about for consumers then? For most people who won't really be involved, or at least if they are involved, they won't be making decisions day to day, for example, on investments, perhaps in pensions and all the rest of it. In terms of the day-to-day life, what sort of impact do you think the current state of the economy and what we're looking ahead to is likely to have?
Well, for investors, I mean, the pound going down makes them difficult. It makes it difficult for them when they go on holiday. They're obviously going to feel it in France and when they go abroad. But having said that, they will also feel it in inflation. So as I said, import prices will come up. That will increase inflation, which will make daily products harder.
And of course, we still buy more than we export. In a sense, we're still net importers, I think, as a country, aren't we?
Yes, we buy more than we export. We are a service economy. We're not really fundamentally an exporting economy. Maybe the weak pound might shift that. But we generally sell high-end services. We sell banking services, consultancy services, advertising services. That is what we do as an economy. They tend to be more higher-end. Yeah.
Mark Shapland from Mail Online. This is Money. Thanks very much for being with us.
Thank you.
Interesting stuff. I know we're going to be talking again about it in the months ahead. Thanks very much. Right, you're listening to